hilarious. UBS Managing Director and Senior Portfolio Manager Jason Katz and JP Morgan Asset Management Managing Director and Portfolio Manager Phil Camporeale are with us. Well, Jason, nothing happening today. Take all of this, put it in the cauldron, and what does it bring you?
It brings us to the fact that Trump finally is listening to business leaders. He had the CEOs of Walmart and Costco in his ear, and he's listening, more importantly, to the bond market and to the dollar, because therein lies where you could have systemic risk. He could deal with the pain of the stock market. Phil and I were talking about that in the green room, but not so much mucking up the system that could lead to financial crisis 2.0. So he's finally listening to the message of the markets.
And the markets really like it, Phil. I mean, you look at the VIX. The VIX is falling. The VIX, of course, the fear index, falling to the lowest since April 2nd. We remember what happened. April 2nd was the day that the president announced the big blanket tariffs. So what does this tell you here? That this really is something that business leaders haven't liked, American business leaders.
Yeah, and quite a move, Liz, this April, right? I mean, it's just been an amazing month. As you mentioned, the last 6 days, S&P up around 8%, which has been nice. And the two things that are most important for us, the business leader confidence, right? If people are walking into the White House and saying, we don't know what to do with capital expenditures, with hiring, with layoffs, that's a problem. But the other piece of this thing is, like, we have no doubt that Jay Powell is going to make it to May of 2026. When that stuff started to raise its head, you know, as asset allocators, we hate when the stock market goes down and the bond market goes down. I think President Trump hates it even more when that happens, because every time that happened, whether it be April 8th or 9th, right, when the market went up almost 10%, or last week,
you're talking about bond market.
When the bond market sells off, when bond yields go up and people are really questioning whether treasuries can provide defense, I think that's when the president has pivoted. So I don't think it's a stock market put. I think it's a bond market put that twice this month the president has exhibited.
Well, and Jason, let's not ignore what happened with UPS. I mean, UPS basically saying that there were some serious issues that they saw, and they're concerned. So as they watch it, and everybody's waiting to see what happens with the China piece of this, how do you invest and maneuver through these, I guess, little landmines that we see with the markets?
Yeah, that's an understatement. So it's really hard to put a target on the S&P or actually put out earnings estimates from the analyst community when they don't know what the E in PE is. I will share with you anecdotally with my clients who are business leaders or in the C-suite. They've seen all this business be pulled forward. Buy that iPhone before the price goes up. Buy the cars before the tariffs kick in. However, they're pulling guidance for the forthcoming quarters. So it's really hard to navigate. After this move where we've recouped more than north of 8% in the market, I think it's time to sort of take a step back and see how earnings play out before committing more capital.
JetBlue pulled its guidance too today. So what I'm hearing you say is that this current quarter and maybe even the next one might not give you the clearest picture?
I mean, unless they really turn on a dime and really pivot from these tariffs, no, we're not going to have complete and utter clarity.
Phil, where do you go? I mean, you have actually liked some munis, and you also like the EAFE, which of course is the Europe, Australasia, and Far East opportunities.
Yeah, so in times of uncertainty, Liz, you have to go back to investment principles. So how we're trying to build portfolios for the long term. The two things that have worked this year is being internationally diversified. Remember, we came after 2 years of people thinking diversification was owning 7 stocks.
Well, that's the thing. Can I just say that finally what this has done is loosen the death grip that large cap U.S. names, specifically the Mag 7, had on people's portfolios here, and now they're going elsewhere. That's a decent thing, right?
Decent thing, and that's so hard for asset allocators to compete with, right? Is why do you want to go out and invest in another part of the world? And then the other thing that's really showing its colors this year is when the stock market goes down, bonds are supposed to go up. The last time that happened, Liz, was 2008. People have no idea how to invest when the stock market goes down and bond markets go up. So I think that has been important. Again, how you build long-term portfolios.
Jason, next week, the Fed meeting. Woohoo! Okay, they expect to leave rates unchanged, but I think you both agree that the Fed's not going to move for the next couple of months.
Definitely not. Without a doubt, they're not moving. Look, I think all along, Trump's goal was to sort of hang Jay Powell out there as a scapegoat in the event that we had a recession. Jay Powell has no reason to change policy stance unless the bond market doesn't behave the way it did, a few weeks ago. Behaves that way, he may be forced to pivot. Latter part of the year, maybe we start to get those cuts.
And one thing I'd say about that too, Liz, is be careful what you wish for. If the Federal Reserve is coming in and cutting rates, it's probably because the labor market is weakening. People are losing their jobs. I'm not signing up for that. Jason's not signing up for that because I think that hurts earnings.
Well, the plumbing of the financial world gets a little wonky, and that's when the Fed steps in. That's when we've got to be worried. Guys, never a dull moment when you two are here. Thank you so much.
Great. Thank you.
Thanks.